All right. I want to thank Shark Indicators and everybody that is attending today. Recently did pretty much a similar webinar about 3 or 4 months ago, except over the last several months, I made some changes to the BloodHound logic that, in my opinion, significantly enhanced what we're going to talk about today, and be able to show you some real good real-time examples from today also. So with that, let's go ahead and get started. And like he said, I did start this back in 2007 for myself. I got tired of, paying for stuff like everybody has, watching signals disappear, seeing stuff on a Saturday, things would disappear on a Monday. So I basically set out and started creating this for myself and have been improving it ever since. Now, what ZoneTraderPro is actually a collection of 4 different things. It's price patterns, which was what I was originally looking at, order flow, and divergence patterns, and volume analysis. And the divergence and volume analysis stuff is basically what has been added in the over the past year or two. And then the information that I'm going to be presenting today about the VIX, that's basically been added and refined over the last year. So I've really come a long way with this over the last year, and I hope you will get something out of this. Now, basically, the VIX is a ticker symbol. If you put in $tick, you're going to get it. And it's basically given to us by the CBOE, and it's called the Volatility Index, or the Fear Index. And it's used to measure volatility based on the S&P 500 index options. It's calculated real time and sent out. And that's how I'm able to pick it up and use it in BloodHound. So what I was able to do is I originally started with a concept of using the VIX and using the VIX to help me determine what a trend is. We hear so much, the trend is your friend. Okay, well, unfortunately, my friend doesn't talk to me that much through the computer. And I had to find out a better way to figure out who my friend was. When options are traded, and this is really the key, there's a dealer usually on the other side of that option. And the dealer, he basically wants to stay neutral, whether he's selling a call option or he's selling a put option. He doesn't want to have a directional bias. And in order to do this, options dealers need to hedge their puts and calls that they just sold with either the ES or the NQ futures. And the website that explains this and basically got me looking at what I was going to do with my software is a website called Spot Gamma. And for full disclosure, I pay for Spot Gamma. I don't earn any referral fees. I'm not a referrer. So, I'm just speaking as a customer and somebody that's learning something new every day from Spot Gamma. Basically, the information about options hedging and the VIX, that Spot Gamma basically teaches you, led me to do the research to get to this point that I'm at today. Now, what you're seeing on this chart is an example of that hedging activity. The picture over here is Bookmap with the Spot Gamma Hero indicator, which is this red line right here. The Hero indicator stands for the hedging of real-time options. What's going to have to be, needs to be hedged possibly, and that impact in a real-time option. On the right, I have my ZoneTraderPro chart with an indicator, which is showing you these bubbles right here. Now, what that indicator is doing is picking up large lot trades. It's going back into the time and sales, and it's reconstructing the trade. So at exactly the same time that this hedge went off, my software picked up the 2,000 lots being sold over here. And that was done at the same time that we saw this drop in the hero indicator right here at 13 on 2 hours on May 25th. My indicator, which I call delta strength, picks that up as the negative 2021 contracts. Now, you'll notice at the bottom of the bookmap chart, the indicator itself is showing a cumulative value for the day. And an important part of the slide is this. The spot gamma hero indicator is reading hedging activity, and this activity becomes heavier as puts and calls are being sold. This is all reflected in the VIX itself. And this is why we want to trade with the VIX. This particular day was heavily bearish, as indicated by the negative reading we got right here of a minus 120,000 when the screen grab was taken. ZoneTraderPro itself, one of the pieces of the puzzle is picking up divergences. Now, I took this picture from just last Friday when I was creating the slide. And what you're going to see here is something different than you've seen from any other divergence indicator. You're going to see regular divergence. So right here and right here, this is regular divergence. In other words, price is higher, but the cumulative delta is lower. We basically got 3 of them right here. This type of divergence is what you probably know and understand, and basically what I personally ignore. ZoneTraderPro also identifies accumulation and distribution, and something that I've named special divergence. Now, special divergence is defined as what you see right here, going from this low to this high. And what is the reason it's kind of special is that even though price rose about 4 points there, the delta was actually negative. So the cumulative delta was negative on that price rise. The areas that I've circled on this chart is where we have divergence combined with a bloodhound trading signal telling us that the VIX is trading in that direction, in the direction of our trade. These are the trades that we want to focus on. We don't want to focus on just taking anything. I'm not trying to call every zig and every zag in the market. I'm not trying to call every top in the market or every bottom. I only want to focus on the things that I know are going to give me the highest probability of success. And those areas are what I've circled. You notice I didn't circle the top up here, even though after we traded down about a point, Bloodhound and the VIX was basically going with us. So if you want to end up taking something like that, that's also basically up to you. There are these signals, for example, this short signal over here, that's something we don't want to take because the VIX is going against us, along with this short signal right here. Like I said, I want to ignore regular divergences at just for any reason, including this regular divergence right here. Down here on the Bloodhound, what I've done is I've identified where the VIX is bullish and where the VIX is bearish. And I'm going to talk about how we're able to figure that out shortly. The purpose of this Bloodhound template is to determine when the VIX is bullish or bearish. It's very easy to do. The black lines on the chart, which I've done down here, denote those changes. So how do we know if the VIX is bearish or bullish? It's very easy, because the way I designed this signal is that half of the signal is coming from price and the other half is coming from the VIX components. So there's not just one VIX and one price. It's a little more complicated than that. So in the areas you see I've written bearish VIX, if there's any green there, that is because the price part of the formula is basically rising and giving us that partial green. Rising price is what's causing the half green signal, and that's what is expected if price is rising. When these areas have divergence, those are the trades that we want. The trades that are, these are all trades from, like I said, last Friday, September 10th. And I've gone and I've marked one losing trade right here, and I'm going to delve into that shortly so that you understand when we get these divergence signals. When we did get this divergence signal right here, we did have a full red VIX. We basically got the signal right here, and then price traded up very rapidly, about 4 points. So, but I am going to take a closer look at this shortly. What I've done on this chart right here is I've actually divided how ZoneTraderPro works, how its divergence indicator works. The first question I'm always asked is when these divergence signals paint. And they paint based on the zigzag that you have set first off. So on this chart, this is a chart of the SPY. I've gone and set the zigzag at 35 cents. The tick setting for the SPY up here is set at 55, and this is pretty much irrelevant. It's set that low because what we want is we want the close of a bar. With the close of a bar, we have information and we can update the indicator. If we put something like a time indicator or a bigger tick size, well, we don't then get information as fast as if we had a smaller tick size. So on this chart where you see the black lines, this is where we had a zigzag, and ZoneTraderPro went from measuring support to measuring resistance, or vice versa. If price continues to rise when we're measuring resistance, such as right here, this is the trade that I was talking about, what is going to happen is the indicator is going to continue to tell you whether or not you still have the divergence that it is showing. And so in this example, even though we first got our signal in here, price continued to rise, and the signal, the negative delta was still present all the way to the top, and then we did end up selling off. So basically where you see these black lines at, that is where ZoneTraderPro changes from being support to being resistance. And Kurt asks, can this be used for stocks? And the answer is absolutely. That this is what you're seeing right here. When I first discovered this, what I was doing is, you're going to see a bunch of numbers that I've intentionally put up here just to get them out of the way. And these numbers are basically how I analyze volume. What I wanted to do, Kurt, is I wanted to put this on the SPY to see what the volume analysis told me. And when I did that, what I found was I found all of these divergences that were occurring on the SPY. And I then went and took those, tried it on other charts, Works on the Qs, it works on Citibank, it works on Microsoft, it works on everything. And that is something that is really interesting. I have some basic theories about why that is happening, and I'll get to that in a second. The divergence indicator, it also allows us to analyze the volume. And this is the main way we analyze this volume is with the indicator seen at the bottom of the chart. And this indicator at the bottom of the chart is basically giving me a ratio where it's highlighted in green, right here and right here. That is increasing support. When the line is red right here, this is, I've highlighted it to show increasing resistance as the price went higher. Now, this ratio indicator is what I consider my most important indicator. And it basically explains why the long accumulation divergence trade from right here basically worked. Because first we were accumulating contracts as price fell, or shares, I'm sorry, as price fell right here. And then we did that a second time as price was trading right in here as we're getting our signal. And what is really interesting is that this volume analysis is actually done two different ways. The accumulation that we're seeing right here as a divergence encompasses every trade that occurs, market or limit, from the low to the low. Now, the analysis that's being done right here is only based upon limit orders from the high here to the low here, but it also incorporates what's happening up until the indicator flips. So what's happening after we made the low is we're increasing our support as price went higher. They were trying to sell it. And what was happening is limit orders were coming in to support price. And that's why price didn't fail, even though the delta here was going to be negative. So again, kind of interesting. The ratio indicator, it first told us buyers absorb shares on the bid in both of those areas that I marked in green. The red line, though, is indicating resistance in the form of limit orders right here as we go up and we make this high. The divergence indicator is telling us that the delta as price rose was a negative 56,000 shares. So from this low here to this point here, the delta was negative 56,000. Pretty high number, actually. You can see over here, we've got another special divergence. That number was only a 2,000 share difference. So you can pretty much guess which one was the stronger of the two signals. And again, this is what I call special divergence, where we're measuring from a low to a high or a high to a low. On my YouTube channel, I did a video illustrating how ZoneTraderPro captures iceberg orders using volume analysis. If you don't know what an iceberg order is, it is a special type of order that costs extra money to execute. The full size of the limit order remains hidden so that it doesn't spook the market and move it away from the price due to the market seeing a large buyer or seller. In this screen grab, I illustrate how Bookmap identified about 10,500 contracts of iceberg buy orders as price fell. This is the blue indicator line you see at the bottom. So here, 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 and one right there. And that added up to about 10,500 when I did the math. The problem is that Bookmap, the problem with basically Bookmap is the data needed to power it, and the add-on for identifying these icebergs costs several $100s. And, you can never buy the program. You're always going to have to pay several $100s per month to see this information. Instead of paying hundreds of dollars a month to identify iceberg orders with Bookmap, ZoneTraderPro identifies the iceberg orders along with all other orders using this indicator to analyze volume. The first area in green right here, there were 3,000 contracts that were bought on icebergs. Now, notice how the ratio indicator just takes this huge dive right here. And that's basically telling us of increasing support. The second area was where we had about 7,500 contracts go out at a price of 43.60 right here. And this is why I shaded the entire green area right here, because the thing got hit like 5 times until the 7,500 contracts were fully blown through. The point I'm trying to make here is simple. Bookmap is great software, but I don't use it anymore. I've let it lapse. And the reason is pretty simple. ZoneTraderPro identifies this support, and it identifies these iceberg orders in this ratio indicator right here. And because ZoneTraderPro identifies the support, what difference does it make if it's an iceberg or not? It's still support. So who really cares if it's an quote unquote iceberg? What's important is that you can see the support with the ratio indicator and not the fact that somebody was paying a little bit extra to get their contracts executed. And that is just a super important point. At each location I circled in green, you also note that the VIX isn't helping us down here, okay? And this is why ZoneTraderPro is, basically complete, because the VIX is telling us, this price is going down to 4,200, stay short, stay short, stay short. But only with this indicator here are we actually able to see that, they're trying to put a floor in at 43.60 right here. And if we had been short from back here, then that would be and our target hasn't been hit, then that would be a real good reason that this volume analysis told us that we had a problem. And that's what makes this really, really interesting. And you notice the numbers down here. The numbers hit over 200 here and hit over 250 here. And what that ratio is telling us is that for every tick, they were accumulating over 200 contracts per tick. And that is a lot. If you just compare it to this move up right here, the ratio is this on the sell side was 34 contracts per tick. So what we can do is we can use these ratios, and they can be relative to each other to analyze this volume. Now, what we're seeing here is a SPY chart with the ZTP divergence indicator and the new BloodHound template meant to look at the VIX. The SPY is used as a proxy for the ES because you see more of these reliable signals on the SPY. And that's what I was talking about earlier. There's some rules here to using the divergences, but like I talked about earlier, the main rule is that we're not interested in what is a regular divergence. You want to see either accumulation, distribution, or special divergence. Now, I put black arrows on this chart to illustrate where BloodHound is basically telling us we can now get into a trade. So that's why you see these the black arrows where you do. First trade back here was a long special divergence. So you see that the net was 72,000 at this point right here. We wait probably about a point, and then price trades about 7.5 points higher. The templates kept us off of that trade until after the low had been put in. The second trade is a distribution short trade, which signals us in near the highs right there. The third trade is interesting because we get special divergence, and we had a signal right in here. So this is the area that we would have looked to go long. Now, what is interesting about it is after we go long, right at basically the same price as our entry price, the VIX and the template are telling us, hey, you need to get out. And so if you exited the trade, you basically, washed that trade, and price traded a little bit lower, and then you got a second entry signal. Now, this is kind of what's important about this software also, is if we have re-entered here, or we just stayed in the trade, which we really wouldn't be following the trading plan, but if we re-entered here along with this trade right here, what we're doing is, if we haven't taken profits just based upon a target, we're being given a real-time signal right here and right here that maybe you should think about getting out of this trade. Now, because the VIX isn't going with us, we're not necessarily going to reverse that trade, but it is an excellent signal to be using as an exit. Only with ZoneTraderPro can we get this real-time signal and exit this trade with a profit. Next, we have another special divergence long. Again, it keeps us out of the trade until we're in the lows right here, just off the bottom. And again, we get a distribution divergence signal. Price has already gone over 9 ES points. So, hopefully you got out somewhere around 5 or 6 points. And we then have another short signal that we were keyed into shortly after the high right here. Again, good for another 6 or 7 points. Now, here's the ES chart of exactly, I put the arrows in exactly the same point that we just saw. So notice on this chart, there was a failed accumulation buy signal right here, that because the VIX is telling us we should stay out of, that was basically the correct signal. And, this is just an important idea because it illustrates how you can go and back test this trading idea that we're talking about here, and just how powerful the VIX trading is to our trading plan. And one thing that I just forgot to mention is where you see the line in blue here, what the line in blue means is that the divergence indicator became non-divergent on that bar at that point. So that's why you see something in blue right there. Basically, it's not going to disappear from the chart if it becomes non-divergent. I want to basically pull all this together and use a couple slides again from last Friday, September 10th. The divergence indicator displays the ratios at the high and the low apexes. So that's what we're seeing right here, right here, right here. And up here at this high leading into the 40-point sell-off into the close, we see a really strong ratio of 165. We know that it's strong because we compare it to the other ratios. You can see where I've marked no resistance on the indicator. And this is something that I teach you, how to read this indicator. But basically, we were in a strong trend, and this indicator, by going flat right here, is telling us that there isn't resistance with rising prices. The resistance is put in by the sellers as price moves up right here. And that's what we see. That's why I put this red line right here. And basically, we just see that spike, and we get the ratio value of 165 contracts per tick. This is where the sellers, they finally stepped in with limit orders to stop this move higher. Now, you also notice that we have two ES divergences right here. And you'll notice that I noted that we had SPY divergences at these three locations here. There's also, when I talk about these ratios, I've done several videos, and there's basically a tutorial on this that is on the website. Now we're going to put everything together. This is the same slide, but I moved the data off the chart so that we can see the patterns. At the top here, we have an exhaustion pattern. That exhaustion pattern is a topping pattern. It's then followed by two trend trades. Okay, and this is where price patterns come in. This is where we expected to see resistance, and basically to the tick, we did. Two of those divergences had, two of those patterns had divergences on the ES. Three of the four patterns had divergences on the SPY. This is why we use the SPY as a proxy for the ES. We find more divergences on the SPY. Now, here is my guess, my theory, my opinion, whatever you want to call it. The futures will slightly lead the cash market. And basically, there are so many algos out there right now that you hear about from Citadel and other high frequency traders that pick up the true whole market order flow. And they have the ability to see these orders fractions, microseconds before they actually hit the market. And basically what my little theory is that they're manipulating the SPY along with all the other stocks that, Kurt asked about. They're pulling their bids, they're pulling their offers, and they're not putting them back in and until they see an actual turning point. And I think this is why we see so many of these divergences occurring on the stocks and not as many on the ES. And like I said, this manipulation happens in all the stocks. So we see this huge statistical advantages when we have divergences in both the ES and the SPY. I'm going to be doing a video on that shortly. And I also have done 3 videos that I'm going to show you real quick, where you can see that this idea where we trade, where we have both ES and SPY divergences, is basically trading at almost 90%. Of course, past performance is not indicative of future results. Now, here are divergences on the VXX. And the VXX is the VIX stock that you can trade. And we can see that at 1306, we have had a special divergence that has been developing, and we see that as a buy signal. And this is where the market eventually had topped out with the exhaustion pattern. Now, what I want you to note is the number of shares that they were long. As price of the VIX, or the VXX, fell 67 cents. So that's the 67 that you see in this number right here. Price fell 67 cents. The delta was a net positive by over 300,000 shares. Again, relativity. Look at, if we go back and we look at only this 130,000 right here, which basically called the bottom for the day. That's the only thing that relatively we can see that we have. And when I say call the bottom, I mean call the bottom in the ES, because this is just like the VIX, an inverse of the ES price, just so we make that clear. Compared to the previous delta, where they were net long just 5,896 shares as price fell 26 cents. When it rose here, it rose on only 1,200 shares when it was rising that 27 cents. So we can see how 300,000 is a pretty big number. The other thing that's really important that we look at is the actual ratio itself. And basically what this is saying is that for every penny that price dropped, they were net long 4,481 shares. And, it's just kind of interesting how price reversed exactly right here at the what I call my strong trend support zone. So I find that a little bit interesting too, but we can see how price was basically bottoming there. Now on the ZoneTraderPro website blog, you're going to see 3 videos where I've reviewed every trade, did a weekend review, and using this new BloodHound template. So basically you can take a look at that. And with this last video up here, I added in what happens when we also have a VXX divergence occurring at the same time. Along with that, the statistics and the disclaimers. Now, getting towards the end, and I'm going to wrap it up and go to the real-time charts from today. But on the ZoneTraderPro website blog, you can also see that I'm going to offer a little special offer for anybody that does purchase, and that's a little vacation in Punta Cana. And this is basically where I live now. And I have an Airbnb here, Superhost, of course. And basically, if somebody's going to be buying the software in the next couple of days, I'll include a little vacation down here in Punta Cana. To wrap up the PowerPoint part of this, basically what you need to understand is options dealers, they just need to hedge their trades. And if we are trading with those options dealers, it makes it a whole lot easier. The VIX is that fear gauge, which it normally falls in a bullish move and rises in a bearish move. There is actually times that it does not do that, but we're talking about 90% of the time, 95%. ZoneTraderPro teaches you how you're going to avoid high-risk trading situations. And I'm going to try to make it real simple because we have the BloodHound template. we have these divergences. And basically the hardest part about trading with this type of system, it's not necessarily the entry, it's going to be the exit. That's something we talk about personally in the training that I do. Divergences developed on the SPY, they just make excellent trading opportunities when we combine them with the VIX. And we show you that in real time. And I didn't really harp on it a whole lot, but it is just so important that if you're in a trade and you suddenly got real-time information coming at you, that gives you a reason to get out of the trade you are in. You just won't believe when you see these charts historically, how many times that was good information. And the thing about this is real-time information. It's not based on, some kind of overbought, oversold technical indicator that's 60 years old. It's based on what the VIX is doing now. Basically, this is how we effectively trade using real-time information that no other program offers. No other program is going to offer the volume analysis, the divergence, the accumulation, distribution, special divergence, and you're just not going to get any of that. Now, the software itself costs a little over $3,000. And besides that vacation in Punta Cana, I'm also going to offer a $200 discount on the software, so long as we don't use PayPal. And that way I can deliver the product to you digitally and basically contact me for that information. The easiest way to contact me is on Skype, just by sending me a Skype chat. And on Skype, just search ZoneTraderPro, all one word. So I'm going to bring up today's charts here and just go over some trades really, really quick. Again, what I've done is I put circles in the area where we're likely going to be taking that trade. So on the open, we start off with a special divergence, goes about 4.5 points, and there you have that real-time signal telling you to get out of the trade. Again, because the VIX wasn't going with us, we're not going to reverse that. We're just basically going to wait for another trading signal. We have that right here, good for a 4.5 point trade. We have another trade right here, good for a little over 8 points. We have another good for almost 7. Another trade right here, good for almost 8. You see how basically we're getting these signals right here on this initial sell-off. Here we would have gotten our first signal right here, trades about 2 or 3 ticks higher, then sells off for 6.5 points. Again, the usefulness of the real-time indicator, telling us, hey, good location to get out of the trade, because we did have special divergence. We have another distribution short signal, good for a little over 9 points. Another distribution short signal, good for about 12 points eventually. However, this is going to be something that we're going to take as a loss, because right in here, our VIX was green and we were receiving the divergence signal. So we definitely would have been out of this trade at this point and thinking about going long. So definitely a loss right there. Now, this was a distribution short. I didn't circle it as either a win or a loss, but I indicated it with the green arrow because that's something to me that is real important, because it signifies that Not only did we have distribution over there, but we had distribution on the ES chart also. So I just pointed that out, but that's not included as a win or a loss. Now, down here, we're really not being given a signal either way. The VIX is basically flat. This red down here, this is attributed to the price falling. So there really is no trade down here. We just don't want to be making any guesses. And that's pretty much going to be it for our shorts on the open. Now, at this point right here, we could see the flip from basically no VIX to the VIX going with us. And we have the first of our long trades good for about 6 points. Right here, forgot to mark that. Right there. Now, this red right there, that's what we're attributing to the pullback in price. This stayed fully green. And that, again, that's the advantage of this as a trading idea. Here, we had special divergence, and we had a legitimate buy signal right there. Price traded about 3 or 4 points lower, so we would have taken that as a loss. Again, we have a special divergence buy signal here, goes for only about 3.5 points. And again, the value of the real-time signal. We then start having a distribution short signal right here. And that was good for a little over 9 points. Another distribution short signal good for about 5. We then go back to having a bullish VIX here. Get about 7 points out of that. We're being told right here, get out of the trade. The VIX flips here. And we can see that we also have distribution divergence going on the ES chart over on the right. That's good for 4.5, 5 points. Again, you're being warned in real time to get out of that. VIX flips back to bullish for this trade here, 6.5 points. VIX fully green here for a little over 9 points. VIX fully, or the VIX is green here. The red is attributed just to the price being price pullback here. Good for 7.5 points. Here we had no signal, and when we reached up here, we were green, so not able to take that as a short signal right there. Here, the VIX was definitely green. We got a buy signal there, calling that a loss. That traded down about 3 points until we actually did have a really nice move up. The VIX, though, remained negative, and we would have taken a loss right there. Now, this is, again, really interesting about the software. I talk about this in the videos. We were green right here, but we didn't have a divergence signal. So we got our divergence signal right here, and we can tell that with the software. So that's why there is no signal right here. And I marked where the signal actually came in, and it came in right here where VIX was painting red. VIX was painting red up here. We had special divergence. And again, what is really the reason to use this is we have a signal right here. We get the signal right as the zone forms, and then the signal goes non-bearish, or it goes non-divergent, I should say. And immediately, if you get out of that trade, you've taken no loss on this trade. And just the power, it's just so interesting to me that here we actually do have this 4.3 point sell-off right here, but the VIX had remained green, and look what happened if you had stayed in. You know, the VIX was basically telling you at your entry point, you know, get out, don't take a loss, and price moves up something like 17 points. That's why we don't want to trade against the VIX. We had a buy signal right here. Again, same exact concept. Here's our buy signal, and the VIX flips red exactly at our entry. You know, just the power of what this is going to do. And then going into the close, we had a short signal there, clear red VIX, and that basically took us through how many? A little over 10 points into the close. So all in all, a pretty decent day. That's basically my presentation. If anybody has any questions, type them in, and I'll start answering any questions about anything we've seen. Theo asks a question: do those arrows repaint at all? And what is the overall accuracy of the symbols, if that makes sense? Theo, that's what I was trying to explain, is that what if we get a signal right here, okay, and price trades a tick higher right here, one of two things is going to happen. The indicator is going to tell us that it is either non-divergent, or it's going to tell us that it still is divergent, and the arrow and the line is going to move from here to here. Now, this is just something that I just want to pick up on real quick. We see this, here's our ratio right here, and this was the 10-point short into the close. This ratio of 11,300, tremendous number. 3,600 is pretty impressive itself for the SPY, but this 11,300 into the close was really high. So I hope that answered your question, Theo. That's why, like I said, we did have a signal here. The signal reevaluated here and would have stayed divergent the entire way down, because the entire way down, once we got down here, the number they were long was 102,000 shares. And what is really interesting is the delta from the low to the high was 466,000 shares. And that is that volume analysis, that all of that buying was met with limit order resistance. That's why this number becomes so important. Now, with my indicators, I'm just not showing them. We can actually see what these deltas are on these zigzags. That is part of the indicator package. I'm just trying to keep it simple right here. But you know, it's really interesting that we can see this is what is so important to me right here, is just this increasing line, which started at around 3,800 and then ended up, you know, around 14,000 because they were actually, as price was dropping, they were still increasing their resistance on limit orders. And that is just so important. Price dropping from this point here, the indicator hasn't flipped. And as price is dropping, they're just coming in with more limit orders. And just exhausting the buyers. Heinz, the template is on the website. It's in a couple places. And if we come to right here, set up for the VIX BloodHound template, it's basically right there under the trading strategy. Dan asks a good question. Can the BloodHound strategy be turned into an automated entry strategy and we manually exit and wait for the next signal? Absolutely. Any BloodHound signal right here can be automated with Blackbird. However, I'm going to suggest you don't do that, because what we don't want to do, you can see that we momentarily right here got a flip and then it flips back right here. Blackbird does have the ability to not be on full, I would call, the word I would use would be full autopilot, where it's red or green. Like if you were looking to take a long, you can set it to so that it takes a long only signal. So yeah, anything that is with the VIX, my VIX BloodHound template, could be added. And ask the price about the price. Like I said, the price is $28.90 with the webinar discount for ZoneTraderPro and the BloodHound work that I've done. Emmanuel says, you mentioned signals are coming in real time. But you don't get a signal until those black bars appeared, usually sometime later. Emmanuel, the black bars are what I drew on there. Okay, so I'm just taking the vertical line tool and to show you right there where it goes from measuring support to measuring resistance. So I was the one that was manually putting the black lines on the chart. So like I said, what is happening is when we zig or we zag at this point right here, the software starts looking for divergences. And that's why right there in real time, if you had been long from right there, you're going to get a real-time signal right there. Now, price will end up trading 2 or 3 pennies higher. Price will end up trading what? Yeah, about three pennies higher right here. So when the bar closes over here, again, we're going to reevaluate. Do we still have a divergence? If we do, this obviously moved to right here. If we didn't, it would be blue at this bar, like you see right here, where it showed accumulation right there. So that is where this became non-divergent at that point right there. So I hope that answered the question. Black arrows. I'm not sure what you mean by black arrows, Emmanuel. Maybe this right there. I didn't. Oh, the black arrows again is something that I drew on the charts to signify when there was a confluence of both a ES signal, and now that I'm looking at it, there should be one right here also. When we have both an ES signal for divergence and a SPY signal for divergence. And again, that's just something that I'm putting on the chart so that you know when we had both of those signals. We our only trading signal is back here. We don't have a signal right there, but we did have both accumulation and on the ES and special divergence right there. Scott asks if this is automated. Scott, here's kind of like I explained, I wouldn't automate this completely, because what I want to do, and this really becomes important, what I want to do is I want to be able to read this indicator right here. Okay. And the read of this indicator basically is telling me that as price is trading higher, that they are not trying to put in any resistance. Okay. And so if I were to get a short signal up here, I wouldn't want to take it. I have several rules. And let me explain kind of how you learn those rules. Anybody that buys my system, I teach them personally. I take them through the process of all 5 things, such as the price patterns, order flow, volume analysis, divergences, and the BloodHound. We go over this piece by piece. And the real important thing about volume analysis is that we're able to read this indicator right here. Again, we just looked back here and there was no resistance being put in. You don't see the indicator popping. That is what is basically important. And when I say by seeing resistance being put in, that is resistance being put in. This thing going actually sideways or the divergent opposite direction is what is telling me that price is going higher. Okay. And I can't see right there, as price is going higher, the ratio is going lower. What does that mean? That means that sellers on limit orders are smart and they're getting the hell out of the way. And, we would be looking for a reason to go long here. I can't make a BloodHound, read what I'm reading right here. So fully automated, no. Semi-automated, yes, would basically be the answer. Okay. Peter asked a great question. Where are your exit signals? And like I kind of alluded to in the presentation, the hardest thing you're going to do is exit. And when we get into a trade, because everything is basically going for us. Everything right here is going for us. The problem is 90% of the time up here at a top, we had full green BloodHound, and that made a top. Well, was there any clue that that was going to be the top? Well, if we come back here to our ratio indicator, yeah, right there. But the hardest thing you're going to do is make an exit, okay? And that is something that, because 90% of the time, you're not going to get a reversal signal up here where there's divergence and a red VIX. It's not going to happen. So what you have to do is create a trading plan. And that trading plan says what you do to get into a trade. That's fairly easy. What you do when you're in a trade, that is not a very hard question to answer. Okay. So if we're talking about right here, what we do when we get in a trade and it goes for us a little, comes back, and we're suddenly red VIX. Not too hard. The hard part, like I said, is getting out of a trade, because we don't have the 100% perfect information other than what we're being told by our ratio indicator down here. Again, if we were long from here, not a trade, but if we were long from here, we could see this increasing resistance going straight into this distribution short trade. Okay, that's we've got to use the information there. And what I personally do is I just set a profit target and I'm happy. So, you set a profit target. It's like playing blackjack. You're taking your chips off the table at 4.5, 5 points. Hey, it's a good day. So that's kind of, Peter, how I would talk about an exit signal. Money in the bank is a great exit signal. David asked, can this be used with the Qs and the NQs? It can. And yes, Daniel, what I was talking about is, you do receive one-on-one private training. That is kind of the key to all of this is you get with me, you send me a Skype. Hey, are you available tomorrow? The only thing that I basically have going is if I have to do something with my Airbnb. So if I have somebody checking in, checking out, or I'm picking somebody up at the airport, then we don't do training. But basically about 90% of the time I'm available. Manual, the green, red, blue arrows keep repainting until the zigzag lines move far enough in either direction. No, Emmanuel, it's not a matter of distance. It's just a matter of evaluating whether or not there is a divergence. So from right here, we had a legitimate divergence, and I can tell that with the software. The divergence continued until we eventually made our low right here. And that's why you see this in green. Where you see something in blue, that is the location that it went non-divergent. So, and what can actually happen is we could get a divergence signal here. It becomes non-divergent. We get out of the trade, but as it continues to trade lower, if there is substantial buying that went on right here, you could reevaluate and you could get the signal again. So long as we're on this leg, this downward leg doesn't become permanent until we have a 3.5 point move up. And this is something that you set. So when we have that 3.5 point move up, then this is permanent and it's not going to change. But if we only popped up like 2 points and price traded lower down here, again, we're going to the software is going to reevaluate whether or not you still have the divergence. And what is more important is this indicator is going to keep telling you whether or not you're getting support in there or not. So that's basically how it works. It's really key to understand that just because you're getting the signal, that isn't the automatic go sign. Okay. If I were looking to sell this, okay, what I need to see is I need to see some selling coming in before I sell it. And that's kind of how I trade this. I'm looking down here. The other thing I'm doing is before I'm getting into a trade, I'm actually looking at the VIX itself. you know, here's the VIX itself. So I basically want to see, here's the 930 open right here. That's the black line, and the green line represents the first hour's high and the first hour's low. But I'm going to look at all of this stuff, and I have this on just on an upper chart. Look at that, and before I make a decision whether or not I'm going to trade. Maurice, if you traded one lot per side, what would Maurice? That's like I was kind of explaining about the exit. You know, I can't give you a P&L, a profit and loss, because you have to have a rule for an entry, which we do, but you also have to have a rule for an exit. Okay, so what is your rule for your exit? You know, did you exit at 4.5 points right here when you had distribution divergence? That's a question that you need to answer. Did you exit at 5 points because that was your target? That, you know, your P&L is going to depend on decisions that you make, not necessarily too much on the entry, because the entry isn't all that hard. It's going to be, your P&L is going to be decided on decisions you make. And, you know, like I said, right here, you have 3 decisions that you have to make when you've got about 4 points in the bank. And, you know, if you took 4 points right there, you got everything that you could get. If you took 4 points right there, well, price ended up trading up 9. If you took your 4.5 points right there, price ended up trading up 7.5. It's P&L is going to depend on decisions, and you know, each one of them put money in the bank. It's if you made a decision to trade here, did you get out when you got the distribution short signal? You know, that's, or did you wait until it came all the way back down to here? Those decisions are what affects P&L. Jeff asked how long the training takes. Basically about 2.5, 3 weeks, and it's on your pace. So I've literally had people go through all of the stuff that I want them to learn in a week. And I've had people take, you know, 3-4 weeks at their pace in order to learn everything, Jeff. So, you know, it's kind of, you know, if you want to learn more, you know, we do a Skype training the next day. So that's basically the idea. Is it's not training on my schedule, it's training on your schedule. And I have people that I've trained that are in exactly 12 hours on the opposite side of the world. So when I wake up at 8 a.m. Eastern time, you know, it is 8 p.m. their time, and we do training as soon as I wake up. So again, it's not really a matter of when, you know, it's not up to me. It's the only thing, like I said, the only thing about my time is that is my Airbnb that I have to take care of if I have something, somebody checking in, checking out. So, of course it's lifetime training, David. And you know, you're always welcome. So yes, I have people like David that I talk to very frequently. And one of the nice things about that is if somebody has an idea that they want me to test and look at, you know, I'm always here. If somebody brings an idea to the table that can be incorporated in this, I look at it and if it can be incorporated, it will. Dan asks, is this a beta situation? Are you updating the strategy constantly, and would we receive those updates? It's not that this is a beta, Dan. I mean, this basically represents, my best thinking. And if something does change, just a little bit story about the way I do business. Back in 2017, I haven't even talked about or shown my order flow charts. But back in 2017, I wanted to upgrade the order flow that I had purchased from two vendors, which will remain nameless at this point. And both of them suddenly said, well, you need to buy new packages. You need to buy an upgrade package. You need to pay us $100 a year maintenance. And I'm like, you know what? I can do this myself. I've used market Delta all the way since 2004. I went through, created the order flow indicator, and gave it to all of my existing customers. When I went and created the divergence indicator, I gave it to all my existing customers. So if there is a change, basically I put it on the website, on the blog, and tell you where to and basically put a link if something gets updated. If I have some different thinking, there would be a video on that, and you can use the information or keep doing what you're doing. But I was very put off by the fact that I had bought quote unquote lifetime licenses, and then I had to pay an upgrade fee, a new package fee, and a yearly maintenance fee. And as a customer, I didn't like that. And so I don't do that as a software vendor with my software. So that pretty much answers Daniel's question. Thank you, Amin. Appreciate that. Not a problem with more education. We're always here, or I am always here. Anybody else have any questions? Now's the time. At the bottom. I don't see any questions coming in. Type quick. All right. I'm not seeing any questions come through. So you there, Keith?
Yes, sir. Thanks for coming.
All righty. And just so that everybody remembers, like I said, I do have a phone. The easiest way to contact me is either on the website or on Skype. And if you come to the contact page here, on the contact page, you can either send me an email or call me, or just search ZoneTraderPro on Skype. And that really is the easiest way to get a hold of me. If you come to the ZoneTraderPro blog right here, these are the last 3 videos that I talk about, where I've gone and analyzed an entire week of trades, just like I analyzed today's trades. This video is a little bit special because I included VXX. And I have a video here identifying the iceberg orders. And down here a little bit further, if you want to check out the actual condos themselves in Punta Cana, here it is. So you can, there's links to each one of the condos down here. So with that,